Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Paris milling wheat and London UK feed wheat. Paris milling wheat. After the market created a cusp back in late May, we had a resultant break higher, something I'd cautioned about back then, and prices rose and fell through stratified layers of support and resistance. Some of them seemed then and still seem quite dense, such as the congestion area we sit more or less just under between 238 to 242, containing the 2013 high at 240, short medium moving average currently 240, and now the flatlining medium moving average currently at 242. Above this is the February 2013 resistance at 247, and above that sits another congestion band between 250 to 255, this time with the 2013 high at 253 within it, as well as just below it the declining long moving average currently at 249. The final things I have to say are big picture items. Firstly, this market is still well within the big bear channel, currently 185 to 261, highlighted in dark blue on my daily chart, and originating actually from October 2022, so it's over a year old. Secondly, I've studied the more recent action in greater depth over the past few weeks, especially since early September, and I originally saw the opportunity for a possible sideways triangle with the upper trend line currently at 242, originally just above the medium moving average currently 242 also, but now partnered with it as some pretty good combined resistance. As I said 2 weeks ago, and I quote, "This is by no means a done deal as a pattern, but it has merit, and though I have not highlighted it this time on my daily chart, I may likely do so next time," end of quote. Well, I have indeed highlighted it in bright red on my daily chart, but what is more, I've also changed its shape. Though not its nature, it is still a triangle, but now a descending triangle, currently 234 to 242. Prices are going to now either narrow or this pattern changes shape again, and I'll be interested to see what happens in both cases. Finally, this also came from my close studying of the recent actions to look at the action around the 11th of October as a bow tie formation of the moving averages, specifically short moving average currently at 239, short medium moving average currently 240, and also the medium moving average. Though it was and is a fairly flat as a bow tie, in that the moving averages went into the pattern in the right order but came out a bit sloppy, with the medium moving average initially rising and the short medium moving averages earlier intertwined. It nevertheless is a genuine bow tie formation. So what does that mean? Well, the theory behind the bow tie formations is the market will move in the general direction of the moving averages they exit the bow tie, which has been mainly downwards, which has sort of happened. Additionally, between 15 to 20 sessions after the crossover, we may see a move in prices in the direction of the bow tie. That is lower. So in that case, it would be approximately between the 1st and the 8th of November. Well, we haven't seen any significant move lower, though on Monday the 6th we did try lower. However, I am partially satisfied as during this window I did change the sideways triangle into a descending triangle. As for the rest, well, we'll just have to see. London UK feed wheat. The move higher from the May to July double bottom pattern reached its climax in mid to late July with a combination of an island top that was also part of a small double top, an Adam and Eve type. Since then, prices have moved lower, reaching both primary and secondary targets for the double top. The short medium moving average, currently at 187.20, has tried, not wholly successfully, to act as a sort of a cap on any rises. And the medium moving average, currently 189.20, for a long while acted as an attractor more than a cap, though in recent weeks, especially this week, has started to do so as a cap. Interestingly, one of the key recent features here, and this is a surprising feature, has been the neckline highlighted in dark blue of my daily chart, currently 184 even, of the May to June reverse head and shoulders bottom, acting as a pretty reasonable support, though I suspect in the background the September 2021 low at 181.70 and perhaps more importantly the 50% absolute Fibonacci line at 180.5 have helped to prop up prices. This situation, I suspect, is not designed to last, as coming in from above we have the declining long moving average, currently 195.05, dropping down to no doubt try and pressure prices lower. You can see the effect it had back in late July, capping the market with a small double top. It is some time yet until the long moving average drops into the frame, but I would keep a close eye on it, as I suspect the room for manoeuvre of this market may be becoming quite restricted. To add to this mix, I would also include the late June to date downtrend, currently at 185.10, highlighted in purple on my daily chart, though I suspect this week's push higher may have dented that particular pressure. I originally drew this 3 weeks ago as this downtrend back then, reinforced by the then slowly rising medium moving average, helped cap the market so effectively in the middle of October. 2 weeks ago I said, and I quote, "It will be interesting to see which way the market eventually goes, above the downtrend or below the neckline, as I suspect some recent pent-up energy may possibly cause a significant blowout in whichever direction, and of course, please be aware of the possibility of false breaks as well." End of quote. Well, we are seemingly exiting the construction placed by these two trend lines. However, there is currently no significant blowout seen here, which is, I suppose, a little disappointing and unsurprising at the same time. At the moment, it looks like the downtrend may be the loser in the contest, as the market seems very happy to travel slightly higher along and on top of the neckline and towards the greater bearish pressure that is the declining long moving average. Now, one final point, and it's an important one. Some may look at the action since late July as a possible descending triangle pattern. I can see why they may think so. However, as I said 2 weeks ago, I do not share that view. So I will not be listing any potentials as a result of a move above the trend line or below the neckline, or any false breaks as well. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.